Hi, welcome to Trivest Invest Wisely. My name is Martin Pelche. I'm a portfolio manager and family chief investment officer here at Trivest Wealth Council. Today I'm going to talk about skin in the game, my latest Financial Post article. And what do I exactly mean by it? Because having skin in the game is probably the most important or one of the most important factors to consider when investing. Deciding who you're going to invest with, what you're going to invest in, and what exactly does that mean. And so, what I mean by skin in the game is we have all kinds of people today in society setting economic policy, for example, influencing tax policy, but actually they don't have any skin in the game. So, what I mean by that is that it doesn't cost them anything if they're wrong. So, in the case of the recent taxation on small business owners, you had the government, the recent federal government, listen extensively to a very few in academia that are fully tenured, have a defined benefit pension plan, offering recommendations on taxation of small business owners who are onboarding a lot of risk. And as a result, we've seen some pervasive tax changes. It doesn't cost these academics anything if they're wrong, and that if these tax policies have a profound impact on the economy, which small business is a meaningful contributor to Canadian GDP, then it's not going to cost them anything if they're wrong. It's just, you have that and I don't, so we should tax that. In regards to looking at economic policy and interest rates and monetary policy, you have a very few, again, in academia and among journalists and some of the bank analysts, economists that are calling for material rate hikes by the Bank of Canada. Having said that, Canadians are very much in debt at record levels, the highest in the G7. We also have a rolling over housing market and an energy market that's stalled out. So we're going to be raising rates to slow economic growth. Where was that economic growth come from? Maybe is it sustainable going forward? Will it cost these economists anything if they're wrong? Do the academics or the journalists who are rallying for massive rate hikes, do they have a mortgage? Do they have any interest rate exposure? And if they don't, again, they have no skin in the game. Looking at our own circumstances, or my own, I moved progressively higher within my career where I had more and more skin in the game. So, for example, I used to be a sell-side analyst making recommendations to pension plans, institutions, as to what to buy and sell in the equity market. Now, if I made a bad call, it hurt my reputation, but it didn't actually cost me very much, other than maybe not taking my next recommendation as to what to buy and sell in the energy space where I was an analyst. If you take a look at where I progressed into being a portfolio manager, now I'm actually making stock purchases and sells and bonds and managers and a whole bunch of other investments on behalf of the client. So if I'm wrong, it's going to cost the client some return, and so it will have, and I'll lose that client, and so it has more skin in the game for me than just making a recommendation. If the final stage is, now I'm a business owner and entrepreneur. I'm operating in an environment as a co-founder of Trivest, where it's very oligopolistic. What I mean by that is the banks own a majority of the market share, and they've been forcing through some margin compression and hitting those who are product manufacturers. So those who are manufacturing products, which we're not. We since shifted ourselves more towards a family office, chief investment officer role. But so we've had to be incredibly nimble and had to offer a superior service in order to compete in this very tight and tightly held market environment. When you're looking at making an investment, make sure that the company that you're investing in, that the management team actually has a good stake in their company. If it's a fund that you're investing in, that the managers of the fund have a good stake in that company. And also look at the structure and ownership of the funds that you're investing in. And if you're looking for, finally, if you're looking for someone to help you manage your money, make sure that they have a fiduciary responsibility. So they have a legal fiduciary duty to act in your best interest, not just a duty of care to make recommendations which have less of an impact to them. However, that said, there's 96% of those out there don't have a fiduciary duty. So that narrows down the list considerably when you're looking at hiring somebody. So skin in the game, it matters. It's very important. Make sure that you don't just have all the risk that you're bearing, that your money manager, the company that you're investing in, the fund that you're investing in are sharing the risk appropriately. So that's it for me this week. Have yourself a good day and keep investing wisely.